Sorry, daddy is crazy. I saw that, bro. You guys not hear that? Okay. But I think when I record, it picks it up. We'll give a couple minutes for everyone to fall in here. But yeah, man. What we got here? Yeah, so today you guys voted for pretty crazy full process for when I first hopped in charts. That's what you guys voted for. I'm gonna turn this into a lesson with slides from the course because that's really obviously it's gonna be in there. Fucking, I'm watching it in the shower. That's insane. You got to get one of those things where you can like stick on the wall. Will we hit 100 people? Under or over 100 people? Chat. Over. That'd be kind of crazy. That'd be like 1/3 of the server on a Sunday. Yeah, post forth. Can you guys get lit or what? Can you guys hear anything? Yes, they can. You might want to restart. Okay, you can't hear me, so no point of giving them instructions, right? Is Simple in here? Simple, you is anyone here? It's just me, lone wolf. Don't worry, I got it. No, they're not. These fucking guys are sleeping, dude. Just kidding. AB, true. AB is in here. Yeah, L mods. Yeah, dude, literally where is all them at? It's okay. I don't need them here. I'm just curious. Like, wow. They don't support me, you know? Whatever. Oh, we had 100. Damn. All right, now we can start. That's what I was waiting for. All right, guys. Let me start recording here. Let me share my screen. Let's make sure y'all can see everything here. Y'all see everything? Is it good quality? Are we good? Alrighty. So, yeah, you guys voted for uh, this here. So, I'll let you guys kind of give me some suggestions. These are kind of like the most responses I've got. I just put a poll. You guys overwhelmingly wanted full process for when I hopped in charts. All right, so that's what we're gonna go over today. So firstly, I'm gonna start with slides from the course because we need to understand it. We need a foundation here. And then we're gonna kind of go over some examples and then more of like a Q&A. So yeah, you guys ready? No volume here. I'm gonna tell this guy to restart. All right, let's go into it, boys and girls. All right, so first, it's all about invalidations, right? With an if-then uh, process. So let's go over this here. If you guys haven't viewed this in the course, make sure you do that. But first step when you hop, before the day even starts, is looking at the previous day's range. All right, because we can only print one of two things, right, for the day. That's either a continuation candle or a reversal candle. It's pretty simple, right? So first thing you're going to do for continuation is you're going to set an equilibrium invalidation, right? That is off of the previous day's range. So ideally, we're always going to be trading within a candle 2, 3, or 4 on all time frames. On all time frames, right? This is where you're going to be in the highest level of probabilities, right? Because you're trading within a swing formation, either the creation of a C2 candle, right, which is the reversal, um, or the continuations, which reside in candle 3 and candle 4. So hold y'all's pings here. Yeah, I'm recording. Hold y'all's pings here I'm recording, right? Yeah. Until the end, right? Because I'm not going to see him. I'm gonna be yapping for quite a bit. Okay. So, like I said, yeah, we're always going to be trading within a swing formation. Um, so here is when the previous day reverses, right? And it closes more of a C2 candle. You're simply going to mark out the wick of the previous day's range, right? And we want to see continuation from the upper half of that wick when we have that bullish reversal, right? And then in a bearish reversal, you're going to want to see continuation from the lower half of that wick, right? Really simple stuff, right? We're starting simple and we're going to go along as we continue here. But for a continuation day, when you have a bearish candle, right? Same thing, mark out the whole range instead of the wick, obviously. And you want to see the lower half being supported, right? In a bullish scenario, you want the upper half supported. Really, really simple stuff. And this is what it's going to look like. These are going to be your invalidation levels coming into the day. That's the first step. It's really simple. But now we're going to refine that level down because this is a huge level, right? This is pretty large, right? We can't just use any swing formation in this area, right? You'd have swing formations everywhere. You'd be taking losses left and right. So we want to refine this level down. So what we're going to do is we're going to look for a key level within this this upper half range, right? That's what we're gonna do. Remember, this is coming before the day even opens, basically, um, or like before the session you trade is what this is what we're doing, right? We're marking out the previous day's range. Now we're gonna mark out the key level refinements. So let's go ahead and go over that. So what we're basically anticipating, right, is the protraction phase of the candle. Um, we're basically anticipating where it's going to form, right? And that is simply the open low of a candle forming the wick, the reversal. That's what we want to trade, right? Or that's not what we want to trade. We want that to form, and then we want to trade the expansion away, which is the expansion or the body, right? So the protraction is the creation of the wick into a refined key level. Once that reverses, then it should expand away, creating the body of the candle. Really simple, right? So there's only two key levels that we use in price. It's really simple. It's a fair value gap and a swing high or low. So for a fair value gap, like I said, you're going to drop down to the aligned time frame, right? So if you want to trade a weekly expansion candle, you're going to go to the daily to look for a fair value gap within the previous candle's range. If you want to trade a daily expansion candle like we do every day, you're going to look for a 4 hour within the previous day's range, and so on and so forth. Here's the alignments, right? Um, so let's use the daily as an example, right? So if the previous day expanded, then you want to look for a 4 hour gap, right? And all you're waiting for, or all you're going to do is mark out this level, right? Um, and we're going to talk about like what you're going to look for when you come to charts later on. Okay, this is the first step, right? And you're basically anticipating, or you basically need price to basically react from here because if it doesn't react from here, then you're invalid. It's invalidated, right? We're anticipating that price opens low into this level, right? Prints a reversal, creating the wick, and we want to trade the expansion away, right? And we'll talk about sessions later, how we can blend these together. Um, Now let's talk about using a swing higher low as your refined key level. And this will be found in two ways, and we're going to go over the second way later. So the first way is the refined key level will be within the previous day's range. When you look back within the previous day's candle, you see a relevant low within the previous day's range, where this is the only level to reverse from, right? When we engage at that level and we get confirmation, then you can obviously trade that, right? And we're expecting this refined key level being a swing low or relevant low to form the wick of the daily candle, right? Reversing price to continue. Now let's go over the sequence for refine and validation. So what we're basically going over right now is when we actually trade into the refined key level and actually reverse. Later on, we're going to go over what if there's not a refined key level, or what if we don't reverse from that refined key level, okay? So in this case, we're talking about when we actually reverse from it, okay? So now let's talk about the full process to when we engage with that refined key level, so all the way to continue away from it, right? So the first step, marking out EQ from the previous day's range, right? Second step, look for a refined key level within the previous day's range. Okay, now as soon as we engage with that key level, we are going to do what? We're gonna we want to see reversal, right? I can't talk. Sorry. we want to see reversal. So in order for price to reverse, we must create a swing point. Go into any sort of retracement in the market, any sort of um, reversal in the market. What do they all create? A swing formation. We have to create a swing formation, right? So we're gonna wait for a swing formation, right, with our aligned time frame. If this is the daily, if we're using if we want to trade the daily candle, right, we know that's we want to trade 4 hour expansion candles away from the high and low of day, right? And what's going to create the low of those 4 hour expansion candles is going to be 1 hour and 30 minute swing formation. So essentially, what's forming the high and low of day for us is a 1 hour or 30-minute swing formation away from our fine key level, right? That's pretty much what we're doing. So this, in this case, if this is a 1 hour swing low, we know that's um, our um, time frames for the high and low of day. It must be a 1 hour and above key level, right? Not a 30-minute, not a 15-minute. Has to be a 1 hour and above, right? And typically, if it's going to be a swing low as our refined key level, it's always going to be an hourly. Typically, it could be a 4 hour, like maybe, but it's usually the 1 hour, like 80, 90% of the time. Okay. So this would be a 1 hour refined key level in the pre-stage range. When you engage with that, you're simply waiting for a 1 hour slash 30-minute swing low to form. Okay. And then when we form that, this is where price has to reverse. If we're gonna reverse anytime, it's gonna be right when we form this swing formation, right? We don't want price to like break this low again and then create another swing formation. That's not a reverse signature, right? As soon as we create the C2 candle, we want price to expand off of it. We want price to continue from it. So in order for price to continue from it, it's gonna respect EQ of that C2's range, right? So we're moving the goalpost, right? We go from EQ as our invalidation level, right? Too big on the area though. Now we go from this as our invalidation level, right? So we move from here to here. Right? See where we're finding it? And then as soon as we engage with this level, create a swing formation, this is not a refined key level anymore. Or sorry, this is not an invalidation level anymore. It's actually this C2 candle. So it's really this tiny little range, essentially, is our invalidation level. And we have price to expand off of it, right? So when price does expand off of it, that's going to create an expansion, right? Price is going to expand, candle two, candle three, candle four, and that's going to create a key level. As soon as we create a key level, right, that is our new invalidation level because if we're going to continue, right, if this is actually the wick of the daily candle, we got to create the body, right? So in expansion, we respect key levels, or that's order flow, right? So these fair value gaps that print after the low day is formed should be used for continuation. So it's usually going to be in the form of a fair value gap, guys, um, after the low day is formed. Pretty simple. So as soon as that forms, we want this to be respected, right? So if price is going to trade into this gap and reverse from it, again, what do we have to create? A swing formation, right? As soon as you create that swing formation, right, you get that C2 closer. It's the same thing. Like if we're going to continue, we got to respect this candle's range. Right? So no longer this fair value gap is your invalidation level. Essentially, it's really this candle's range, right? Now let's talk about maybe price doesn't respect this fair value gap. Okay, then the whole idea is done for pretty much, right? The whole idea of having a continuation daily candle is done. This is no longer the low of day, essentially. What if this fair value gap, or what if this swing formation fails, right? What if we just kind of consolidate in candle three? Well, what does that create? A relevant low, right? Because that would be a three candle formation, right? Where you have spaced out lows. So now this low right here would actually be your invalidation level. So as soon as price engage, you have to demand price to engage with this low because if this candle consolidates, for example, that's not a reversal from this level. It's consolidation, right? So if we want to trade away from, if we want to continue, right, and when price consolidates, we have to manipulate the low, and the cycle continues, right? If we engage this low, we need to reverse from it, right? So you would need a C2 candle, and then you can mark out the EQ, right? If you don't reverse from that, that's your invalidation level, or that's your idea invalidated. Does that make sense, everyone? Hopefully it does. All right. Now, when we pair this all together, like I said, we're going to be trading 4 hour expansion candles away from a low of day, right? And price has to print a C2 candle every single day, especially when it opens low first or opens high first. It's always going to create a C2 candle from a high and low of day. And where do we expect these reversals to happen, right? For these reversal candles to happen on the 4 hour time frame from our refined key levels, right? So essentially, we always want to trade a 4-hour expansion candle, right? So when we engage at this level, right, this refined key level, and we print that C2 candle, if we have a small wick on the 4-hour, it can reverse into expansion, right? And once these 4-hour candles close, we should be continuing off of them, right? These expansion candles, we should be continuing off of them. So what do? We do the same thing, right? We mark out EQ of the previous candle's range. And what is our refined key level going to be? Probably the gap that was created right after we reversed today, right? Um, and that is going to be found in the previous candle's range. You see how it all comes together? And then what would this be right here? GXT reversal sequence, right? Because this candle right here is not opening up with an inline swing. So we must create one from a key level. It's as simple as that, right? Beautifully mechanical right there, right? So when you put it all together, it looks something like this. Okay. So you're going to hop on the charts and it's really simple, right? We're going to go over that in a minute, but you're essentially looking for this exactly to play out. So you're going to open the day where maybe you open the charts and you're right here in price, right? Okay, so you already know that this is your invalidation level. Maybe you open the day right here, right? Okay, I know this gap has to continue, right? Maybe you open the day right here. Okay, there's no reversal in price, so I know my refined key level has to be hit. Right? It's very simple, but we're going to go into that in a bit. So now let's talk about where you maybe the previous day closes and you look back within the previous candle's range and there is no key level, right? That happens. There's no key level. There's no refined key level. Or we hit that refined key level, but we don't reverse. But that doesn't always mean it's invalidated. The whole idea is validated, right? As long as price is still respecting equilibrium of the previous day's range, you're pretty much good, right? Because what can price do? It can open low, right, into a key level, for example, and then consolidates. So what would that be? A and B reversal, right? Expansion to a key level instead of expanding away like that reverse signature that we want. Maybe expands, consolidates. Okay, if we expand and consolidate, then this becomes your refined key level, right? So either those two things happen. Maybe we don't have a key level with the previous range. Okay, cool. We must reverse off of a swing low that is created within the same candle's range. Right? So baby or basically baby is crazy. Basically, this candle is creating the refined key level, right? Because it opens low, generates a swing low in the form of a relevant higher low, and that swing low will be used to reverse price essentially. Hopefully that makes sense. Okay. And this becomes really easy when you view this through sessions, which is what we're going to do. So this is what it will look like, right? Where we open low, put in a swing low, right? It's not going to be from a key level because there's no key level within the pre-stage range. So you can't trade this. You're basically using this to reverse price, right? So when we engage at that level, what do you want to happen, right? Same thing, right? C2 candle, the whole process, right? We form a gap. That's your new invalidation, blah, 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 right? Same thing. Now, when we reverse from this level, this is the real invalidation, right? Is when we disrespect equilibrium of the pre-stage range because now there's nothing to reverse from, right? You're making too deep of a run. There's not enough time left in the daily candle, so it's whole invalidation. As soon as we create this, it's like the only time to reverse essentially. So now let's view that through London session or like yeah, like via sessions. Okay, so this would be London reversal. When you come to the charts, if you're a London trader, this is what you want to look for. You ideally want to see Asia consolidates because when Asia consolidates, it gives you an extremely well-defined area to reverse from, and that's Asia session lows when bullish, right? You don't want to see an established high day put in or a low day put in. Um, you could maybe see Asia put a low day in, but we'll go over that in a minute. But this is ideally what you would see if you want to see an Asia reversal is a London consolidation, right? Because if London consolidates, right, the day hasn't expanded yet. Us as traders, we always trade a specific session and we want to capsulate an expansion in that session. We don't really want to see, ideally, the previous session expand. It can expand, but not creating a daily expansion candle, right? Or like trading into like the overall draw on liquidity. We'll go over that later. That's not really what we want to see. The best things you want to see when you come to charts is the previous sessions either consolidates or retrace because those are continuous signatures, right? So we expect the next session to do what? If those previous sessions consolidated or retraced, then we expect those the current session we're trading to reverse and expand. That's what we want to actually say. So this is an example of Asia not hitting a refined key level or maybe hitting a refined key level and just consolidating. Basically, it didn't reverse. So you'd be expecting, you should know that this next session should reverse, right? And where is it going to reverse from? Asia session lows or the refined key level, either or, right? Because, like I said, maybe we don't have a refined key level, maybe we do. Doesn't matter. It didn't reverse. So either Asia session, or sorry, either London session has to hit that refined key level to reverse or has to hit Asia session lows to reverse. It's really simple, right? And that is going to be forming the protraction phase of the daily candle or the wick, in other words. So when or if London reversed, what are you going to do? Right? You're going to look back within London's range. If it reversed, it expanded away, right, from that original swing formation or that key level. And when it expands away, what does it create? Gaps in price, right? When it does that, we know that if we're going to continue in New York session, we should refer to those gaps or those key levels that London created to continue off of. You see how it's all coming together. And again, when we engage at those levels, what are we going to create? Swing formations. Swing formations. Okay, if New York is going to continue, then we got to respect that information, right? And we went over that in our invalidation refinement slides in the beginning of this lecture. So now let's talk about the New York reversal, if then. So if you come to charts and Asia nor London either hit your refined key level, or maybe they did, but they didn't reverse, it's simple. You got to reverse from either Asia or London's highs, right? That is the last line of defense. Like you have to reverse there. And if you don't, then you cannot you can't have a whatever your expectation was, right? If it's a bullish day, it can't. It's invalidated, right? Um, so when I come to charts and I see that, Asia or sorry, London actually traded into what did I say? If I come to the charts and I see that London traded into Asia sessions lows but didn't reverse, you see how this is not a reverse signature. We engage that low. We don't print a valid C3. We don't expand away. So I know this is consolidation. It's just like one big consolidation, basically. So I know that we have to reverse here, right? This low is basically going to be within the upper half of the previous day's range. It's still respecting equilibrium, right? In a bullish scenario, for example, right? So I know when we engage this level, we have to reverse here. If we do not, like I said, totally invalidated. The whole idea is invalidated. Um, if we form that switch formation, I know that this has to form the low day, and we have to expand, right? So this is what we'd be trading, right? And if you want to trade like PM session, right? We know that early New York reverse, we got to continue off of that, right? As long as there's drawn liquidity, right? This is the main thing when you come to charts, right? Is there an open draw liquidity? There has to be open draw liquidity. If there's not, then what are you trading towards, right? You're just blindly pattern trading, hoping and wishing that price just continues, right? That's not what we want to do. So that's pretty much the entire lecture. Now we're going to some other things that we want to look for, and that's going to be the actual formation of the daily candle, right? This gives us insight as well. When I come to charts, first thing I'm looking for is all these things like I just mentioned, right? How we engage with the key level essentially. It's pretty much that simple. Have we engaged with the key level and did we reverse? Because if we did, there's going to be some key level to continue from. Okay. And if we didn't, then I know that I know exactly what we should be reversing from, right? It's relevant swing highs or lows, or session highs and lows, right? It's pretty much just that simple. Um, or maybe a gap as well. Maybe the other sessions didn't reach the 4 hour gap or something. Um, it's pretty much that simple, right? Um, or the other things I'm looking for, right, is the actual formation of the daily candle. How is the daily candle forming so far? Is it opening high first? If it is, we have a key level here, then I know that the profile that the previous sessions printed is supporting the idea to go lower, right? Especially no established low day or something. Or if it's opening low first, then I should be more bullish, right? And I should be expecting that reversal profile because the previous session didn't reverse, they retraced, right? Does that make sense? So these are some things I'm looking for. And of course, an open draw liquidity. Like these are the things you have to have in order to actually have a high probable trade, right? So this case, when I come to charts at 9:30, this is when we pretty much come to charts at 9:30, right? We actually have this SMT here, right here, right? We have this SMT divergence, right? How is the daily candle printing? It is opening high first, right? Pretty relevant high as well, right? As you guys can see right here. Um, so if we're going to continue, like we essentially have to, we ideally want to see this being respected, right? Um, and this is 9 o'clock, by the way. This is 9 o'clock candle, but we do not respect that, right? And if I go to the lower time frame, you're going to see we kind of just consolidate. You guys see this? We kind of just consolidate here. So if we're gonna continue, like this has to be the last. I'm talking like last line of defense, right? Because I'm gonna go the 4 hour candle. I think there is a two-stage PSP here, and the reason why we can still like look lower because of the two-stage here, essentially. Right? This is the creation of the two-stage. So if we're gonna create, if we're gonna reverse, I mean, it has to happen here, right? Right when you create this two-stage, it has to happen here. So as soon as we create this C2 candle, we pretty much have to respect that area, right? And I actually took this trade as well. You're gonna see what happens here. We create a two-stage basically, or a strength switch, right? Right here. So you see how the high right here is 11 o'clock, but the high right here is 10:30. So there's your strength switch, right? So you can allow, if we form a swing formation, right, and it's a PSP or something, you can allow it to sweep it one more time, basically, to create the two-stage, obviously, right? So this is kind of like a nuanced example in a way. This is something I traded, right? We go to lower time frame. What do we want to see? That V-shaped signature. We have V-shaped signatures, right? I can't tell you where exactly I took this. Maybe the 5 minute, like right here or something. Maybe even lower. I'm not really sure. But this would be valid, for example, right? Stuff like that. You basically be trading the reversal because think about it. This is the this is the highest high on YM because it took it out. You have to view it like this almost. You have to view it like this. Whoops. Right? And this is the opposing candle, right? That created the SMT or manipulated, right? So really, this is the actual first CSD right here. It's actually not this one. It's not this one, right? So it's this one, dude. Oh my god, bro. Hold on. All right. Thank God you guys are not weird. You guys probably won't call that number. I don't even know who that is. But, dude, in my free server, like dude, someone called me and like people are hitting them up, like, dude, weird. I know you guys won't do that, but this is the first CSD, right? Um, and we expect this to be our new refined key level, essentially, right? First, it was EQ this wick, but as soon as we form this high, it's now this is our refined key level, right? So you can take an entry off that. Put your stop loss up there. I forgot where exactly I took this, but I definitely took this. I don't remember where I TP'd either. I think it was like the current low of day or something. Current low of day is Asia. Stuff like this, whatever you take, it doesn't matter. There's also gaps here in price as well that you could take. I might have took this. I don't remember. Either or, they're valid. As long as your stop loss is on a protected high or a protected level, for example, like if you enter this gap, you put your stop loss up here, that's like technically fine, right? As long as you have 2R into the draw liquidity, you're good, right? Doesn't actually matter. But yeah, this ends up playing out very nicely. And yeah, those would be our invalidation levels, right? If we just continued and broke that two-stage SMT, for example, like as soon as we create this two-stage PSP, right? If we just continued, that would be an invalidated, right? As soon as we engage with that this high, which is the previous candle's high, we have to create what you absolutely have to create a swing formation. If you don't, totally invalidated. Does that make sense, everyone? So kind of a nuanced one, because as soon as we engage with this high, we didn't technically reverse. We kind of just consolidated. So it's like an AMD reversal, right? It's price expanding to the high, price consolidating. You can give it one last chance. Okay. So if price is this, just like in the form of our just like this actually, right? If this is the key level, for example, we consolidate. You can give it one last chance to reverse. It's kind of like a what three drive almost, right? Or whatever they call it. It's kind of like that, but I guess you could say it's kind of like that. But yeah, if price expands into a relevant level like this, let's go like this, something, and it prints that swing formation. That's ideal, right? That's expansion met with expansion when it creates a swing formation and then instantly expands away. But if it does this, kind of consolidates, right? And then this is where we have to reverse, right? Because we don't want to just keep making lows and lows and lows, right? It's just gonna be a smaller consolidation, right? A small one, not a big one, ideally, that lasts very long. But yeah, that is something that we can see. Okay, so a little bit nuanced, but you can see how we would kind of move the goalposts as soon as we create a gap, guys. For example, like if we want to continue, ideally this gap, that's not going to be, that's probably not going to be hit because it's high in premium. So the first gaps that print, guys, in like really high in a range can definitely be left open, like typically. We'll go over gap selection and breakaway gaps in a later like video or like something like that, right? We'll go over that later, but yeah, those are typically what can be left open. But for example, like we'd want to see a gap. It's really simple, right? If we want PM session to continue, this is essentially PM session. We're going to look back within New York AM sessions range, the first half of New York, for some type of gap to be respected, right? In this case, there's nothing really interesting. I probably want to use this gap, honestly, but it never gets filled. So you just don't get an entry, right? But that's something I would want to see. So let's go over another example here. So this is going to be a reversal day. So when I come to charts around, you know, 6 o'clock or 10 o'clock, whatever, not 6 o'clock, 9:30, or 10 o'clock. So usually like 9:30 within the 6 a.m. candle, you're gonna look back within the previous range, right? What do? We open low into some lows, right? And that profile is potentially a reversal day, right? Look at it, open low first. Look at that V-shaped signature that we're printing here, V-shaped signature. So I already know that, okay, we could probably continue because, I mean, look at the daily candle. It hasn't even really expanded yet. So I'm going to look back within the previous candles range and see if I can, not the previous candles range, the current candles range, to see if we can continue off of anything, right? So when I look here, there's really not much to continue from. You have a tiny gap. So at 9:30, we got to continue from somewhere, right? So I'm looking for a key level up in here. Okay, cool. This looks like one. So as soon as we engage this level, I want it to be SMT, divergence, some type of SMT. So here's 9:30 right now. Is there any SMT divergence at this point? No. Okay. So there's no SMT divergence. So we're gonna have to wait for something to be created, essentially, right? Because that's something we also require, right? Is SMT divergence. So on the close of this candle, you're gonna see what we actually create, and that's a gap on the 4-hour time frame, right? So now I know that's okay. We didn't create a reversal at this swing low, right? But we are creating this gap on the 4-hour time frame. And you only ever, guys, you only ever create a 4-hour gap to continue from when Asia is a low of day. That's pretty much the only time you ever do this. So whenever you see like Asia low of day or high of day, look for a 4-hour gap to continue from. Those are really good things to see. So if you look here, this is the only level to continue from, right? And that's exactly what we do. We create the SMT fill, and that would be your basically refined key level to continue from, right? Um, and maybe this low would be like your key level to reverse from or something, right? You don't want to see SMT, blah, blah, blah. But the candle profile is supporting this idea, right? So you have to view this. You have to view this right here as a C2 closure. You have to view this as a C2 closure because the other assets are creating that. You guys see that? They're creating it. So this is a two-stage because this previous candle's low is the fair value gap high. So you have an SMT with the key level there, and then a candle closure that's closing bearish, while this one's closing bullish. So essentially, you're gonna look back in this previous candle's range, and that's gonna be your refined key level. Now, whenever it closes like this, guys, you see how it's kind of neutral. There's like a large wick on both sides. You're gonna mark it like this from the opening price to the wick low. That's gonna be your refined key level. It's actually this, right? If you didn't know that. So you're gonna look for a refined key level ideally in there, and that's gonna be your key level, right? So you ideally want the candle to open low. If you're a continuation trader, Um, you want it to look like that, but you see this wick right here? That's probably a CSD. Yeah. So as soon as you open it here, so whenever you have like these type of situations where you have like maybe an expansion candle or reversal candle and a large wick on the top side, this is simply a lower time from retracement. So this is usually when, if we're going to continue, it's just going to rip. Why? Because we're already retraced. Like we don't really need to open low again because we're already retraced. So that retracement or this wick is the CSD. That's like the intercandle CSD, right? You have more of that V-shaped fashion. That's what you want to see. So as soon as we close above there, pretty much good to go. Pretty much good to take that. And now the low of this candle, you see the low of this candle is protected by this opposing candle, right? That's kind of the whole point of intercandle CSD, right? Um, yeah, anyways, like that would be your new invalidation level. It's no longer previous candle's range right here. It's no longer 50% necessarily. It's now this candle. This opposing candle should hold price because we should continue off of it, right? That we shouldn't be returning here or even down here, right? Because we should make um, lower highs or what is it? Higher lows. Sorry. Does that make sense, everyone? So yeah, now we're just moving the goalpost. What do we want to do when we create swing formation, guys? We want to create expansion away, right? That creates gaps in price. So if you want to continue, although I wouldn't trade this continuation because you see how like the draw liquidity is too far away. That's another thing, guys. Like if you open the charts, draw liquidity is too far away, pretty low probable, right? This is really what I'm after right here, honestly. It's this high right here. Right, that's another thing for draw liquidity. You can just target the current high of low day if there's no draw liquidity above. I wouldn't really look to trade. I definitely want to be looking to trade here, obviously, right? Because this is the future gap, but you're basically long the high of day. You want to be trading right when this candle opens, essentially, and ideally get 2R here. Not in this case. Yeah, for sure, you need to get in before we get this draw liquidity. That's definitely something, right? But yeah, essentially, if you want to continue, let's say there is a close draw liquidity. What are we going to look for? Gaps within the previous session's range or the previous 4-hour candle's range. If I look here, you can see this wick right here. It's like the same logic, but I just showed you guys. This expansion candle here, what does it have? It kind of has this large wick. Not a large wick, but it has a wick. What is that? A retracement. So we know a retracement has already happened within the previous candle's range. So that means the next candle should expand if the retracement actually hit a key level and reverse from it, right? So you can see the last 1-hour candle of the 10 a.m. 4-hour candle retraced into a gap. I believe there's an SMT fill somewhere up in here. I think it's like right here. Yeah. Maybe that's equal lows. Yeah, I'm gonna say those are equal lows. So probably no SMT fill, but I thought there was SMT maybe right here. Probably not. Maybe on another feed, but that's what you'd be looking for, right? Uh, Price to retrace. And if it did that, created that reversal, then we can just expand. So if you guys didn't know that, but yeah, that's essentially what we're looking for, right? These gaps to continue from, right? And if we're not going to continue from these gaps, what are we going to do? It's going to be invalidated because the 1400 candle is going to retrace too deep into the pre-scan's range, disrespecting what? EQ, right? So that would be like an invalidation, right? Because the current like session that we want to trade, we want to trade expansion, right? So we're basically viewing, we can view sessions inside of an entire 4-hour candle, right? So if that 4-hour candle is trading too large of a wick, we know that session can't expand. Does that make sense? So yeah, let's go over another example here. So this is a continuation day. This is the daily candle, as you guys can see. And as you can see, it does technically disrespect EQ, right? But this is the only level to reverse from in EQ. So it's okay. Like it's fine if we do like hit EQ or something, as long as you form the reversal there. Like you have to form the reversal there, right? It doesn't matter if it hits EQ or something. Like that's fine. But if that is your refined key level, I don't want to see like consolidation there, for example. Like that's not really what you want to see. Like has reverse there. But obviously here, this is a relevant low within the previous candle's range. As you see, there's no like 4-hour gap or anything like that. I do not believe. Yeah, there's no 4-hour gap or anything like that. It's literally just the only level to reverse from, essentially. It's either that, it's either we reverse from here, or we do something like this. It consolidates and then creates the key level within the same candle. which is this, which is this, right? Because when you format swing low, that would create a relevant low, right? So if this is Asia consolidation, London manipulation, right? We're creating a relevant low, protected swing, and we can expand. You know what I'm saying? So it's either of those two scenarios. When I hop into the charts, if you're a Asia trader, or sorry, a London trader, that's kind of what you would be demanding, because it's highly unlikely you're gonna consolidate in Asia and then also manipulate in Asia and then expand in Asia. So you know that like if you're an Asia trader, you come to charts, you know that you're probably not gonna have a good session, right? So yeah. So when I come to charts around, if you're a London trader though, what am I looking for, right? What did they do? It's opening low first, right? This is great. If I'm a London trader, now we just need to engage at this level here, right? And we create SMT right here, not right there, sorry, right here. So when we create SMT, what did we just create? Uh, a swing low, right? So this is actually London. Sorry, this is London right here. And at this point, you have not engaged with a relevant level. So you know that if we're going to get some expansion profile, it has to happen very early because what is the session opening near? It's opening the refined key level, right? That's another thing about a expansion profile. You want the session to open near the key level, right? If I'm a Asia trader, I want the day to open near the refined key level. Does that make sense? Because if it's opening too far away, I know the price has to travel very, very far to get to that key level, which is creating these 4 hour um, like large wicks, for example. Like it can only create a reversal candle, which we don't really want to trade, right? And then London would expand, for example. So here we know that we're opening very close to it. And we know that if we're trading a reversal candle, or sorry, a reversal profile, we have to create a 4 hour reversal candle. You see this 4 hour reversal candle, right? It has to have that small wick. Um, and that is why we want to open near these refined key levels, is because it can create those small wicks, right? Because we're opening near it. And we know that to form the high and low of day, we want to create a 1 hour above swing formation, right? Which is also creating the low of this 4 hour reversal candle, right? Um, so you see all these things tie together with the GXT model. So as soon as we create this, guys, what do we mark out? Since this reversal candle is closing near its own high, you almost treat it like an expansion candle, right? So this EQ essentially is your refined key level. So that needs to be respected for us to continue. And as soon as it does, what are we going to create, guys? Who could tell me? Let's go to chats. What should we create? Yeah, key level, right? If we're going to continue. Um, so as soon as that gets created, you just wait on your hands, right? You are not engaging with price. If I open the session right here, what do we what do we have to wait for, guys? Can I just trade continuation? Because oh my god, there's a draw liquidity. Oh my god, we get a 3 minute CST right here. Can I trade that? No, you can't, right? Because why? What do we want to always be within? Yeah, swing, right? And we create swing formations from key levels. That's how we anticipate swing formations, right? Because swing formations can form anywhere and everywhere, but we can't anticipate the expansion unless it actually forms from a key level, obviously, right? So this is what you have to wait for. If you don't get it, you don't get it. It's as simple as that. See how you don't get it? So that sucks, right? You wouldn't get that. But we engage with a what's it called? A what's it? An objective. Jeez. We engage with the objective on our way to the overall draw on liquidity. Right. So this is where we can start to anticipate what? Yeah, new phase of price, right? And what do new phase of prices do? They consolidate, they retrace into key levels. They either do two things. They either create a key level. So this is our um, our objective, right? When we engage with that, they either retrace into a key level from the previous candle's range, or they consolidate and create a key level. They consolidate and create a key level. You see that? And then we just need to engage with that key level, create a swing formation. That swing formation is the trigger for another expansion, right? Makes sense? So what do we do right here? If you ever see a large range where there's like multiple gaps in price. You see this? Multiple gaps in price. Jump up one time frame, and you're gonna see one gap, right? You can just on any time frame, by the way. If I, on the 4 hour chart, for example, if I see a bunch of gaps, go to 6 hour, right? I mean, you could either do this on a daily chart. It's pretty funny, but I don't do that. But you really could. Um, but if I go to the 90 minute, it's the next highest time frame. What do we got right here? Sorry, it's with CL. Is an SMT fill in the form of what? Since these asses over here, they already engaged with this high. What is this right here, guys? Yeah, strength switch, right? Strength switch SMT fill. So we know that this right here could be the creation of our new swing, right? You see what happens? We just expand. So why do we just like, rip right off rip? Why do we just rip right when the candle opens? What did we just talk about? What does this candle have over here? Yeah, already retraced. Yeah, good job. It already retraced, dude. So it's like if we're gonna continue, it's just gonna fucking rip. Like that's what's gonna happen usually. So if you guys didn't know that, now you know. Candles that close like a C2 candle close near its own highs, for example, you get more of a chance to retrace usually to create that intercandle CST. But yeah, essentially like you'd mark it out like this because you have that large wick. You're gonna mark it out like that, and this is your refined key level. Does that kind of make sense, guys? But we can trade. So we come to charts around 8 o'clock. You can come to charts around 8 o'clock for oil and gold. I wouldn't do it for indices, honestly, but for gold and oil, absolutely you can. So yeah, like when I come to charts, we're opening up in a swing, right, from a key level with SMT. So it's like I know that we have a reason to continue. You guys see that? So these are things I'm looking for. I'm looking for, is there a reason to continue? Have we hit a key level to continue? Have you reversed to continue? You know what I'm saying? If not, then you just wait for it. You guys see, it's pretty easy, right? It's nothing new. And yeah, that's a good example there. Last one. This is like an invalidation, right? So here's the draw liquidity. Another thing you do when you come to charts, like what are we closest to? This is also for higher time bias. Are we closer to buy side or sell side? Obviously, here we're close to the buy side, so I'm going to be bullish, probably, right? The day pretty much opens low first as well. Um, and what did the previous session do? So this is kind of like late London session reversed. So what does New York have to do, guys? Continue from what? Oh, claim your prize. Let me claim mine. Yay. It has to expand, right? It has to continue from the previous session's what? Yeah, gap, right? Key level, right? So if London reversed, New York should do what? Continue from a key level that the previous session created, right? So essentially, this is your refined key level. It's these gaps, not this one. Why not this one? Who knows? Yeah, it's too low, right? Um, essentially, it's we don't want to see like deeper traces and expansion. Like I don't really want to see price go all the way down here. That's why I usually look for the most recent gap in price. All right, especially around higher time frame openings, right? So if this is a 4 hour open, it's like this is irrelevant. Why? Because if price opens low all the way down here, what are we creating? Large wick. We want key levels around the opening prices of these higher time candles because that is what allows them to create that small wick. So we would need what? We would need price to engage this level, ideally some form of SMT. But if this does not happen, we would create we at 9:30 basically we immediately expanded the range, pretty much invalidated, right? So your idea of bullishness completely validated. We don't even I don't even really want to see price reverse here. Where's the daily open? Hold on. Yeah. Yeah, that would be like seek destroy profile. This profile is not really great either, honestly. Not the greatest of all time. Because we're just kind of seek destroying, as you can see. But this would be invalidations, right? The profile is, yeah, now I look at it, it's pretty mid. Like that's one cause for concern, but it's mainly this being the cause for concern. It's not respecting this. So your idea is completely invalidated, right? Honestly, the first signs of invalidation is if you don't even create SMT with a gap. That's pretty bad. That's not good to see at all. So those like early signs of an invalidated continuation. But yeah, let's go over some questions now. Talk about when and how you'd set alerts. Yeah, sure. So if you come to charts, for example, if I come to charts here, now let's go over like right here. Let's say you're bearish, for example. If I come to the charts and we haven't put a higher low of day in, you're gonna identify the key level that price needs to reverse from, set an alert. It's really simple. Set an alert, boom. Whoops, not that. Okay, I can't set alert, but this would be an alert, right? Set an alert there, right? As soon as we engage with that, as soon as your alert goes off, okay, now you just wait for a closure. So you could check your phone or not your phone. You could set your you could set an alarm like every hour or 30 minutes because you know that to form the high of day, we have to print a 30 minutes or hourly closure. You know that, right? We already know that for GXT alignment. So here's a 30-minute close. Okay, cool. This can be your refined killable, or sorry, what? This can be your high of day potentially. Another thing you could do is set alerts at the the future opposing candles. This is what I do all the time. I will set an alert right here because if price is going to reverse, it has to come here to actually CSG. Does that make sense? So that's another thing you can always do as well is set alerts there to create these CSDs, right? So as soon as we create that, let's play play real quick. Okay, this is a shitty reversal, but as soon as we CSD, for example, if it's clean, okay, now I'm on the charts and I could get in. You know what I'm saying? So that's another thing there. And simply, if you want to continue, if it's a continuation profile, um, for example, let's say we want to continue, right, from this gap. It's really simple. Just set an alert at this gap. You know what I'm saying? That's it. Check the current weekly profile to see if it aligns with the current data profile. Not necessarily. So a clean weekly profile, um, this is how you can anticipate like maybe multiple days of expansion. Because if it's like seek destroy, you're not going to get multiple days of expansion. But not necessarily. I'm just anticipating a lot of times a very short term move. So I don't really need the weekly profile to be hit. Because sometimes we're just trading like 1 4 hour expansion candle, right? I don't need the I don't really need the daily weekly profiles to support that. Just the daily profile, honestly, right? It's always a great to have that though, for sure. If you want to hold to like higher type of targets, yeah, you would probably need that. Can we use 15-minute strength as PSP? Yeah, yeah. Only we can only. So you're only going to use a 15-minute um, strength switch, or sorry, you're only going to use a 15-minute swing formation to confirm as a second stage SMT, right? So it's like the second stage SMT, but only if it's in the form of a strength switch. Only, only, only. So for example, you're not going to do this. You're not going to have first stage SMT here, and then you know, and then this be bullish, for example. Like if this is bearish, then yeah, because that's a strength switch. Um, but you ideally still want to wait for the swing formation to happen. So you're going to wait for that 30-minute plus 1 hour swing formation to close ideally, and you're just going to look back within it. So as soon as you close, look within that higher separate candle closure. And if you have the 15-minute strength switch, is when it's really valid, you know? Like you could trade the C2, but it's all up to you. What is the best sequence to get like two-stage PSP and when to not require two-stage SMT? Yeah, any variation really of two-stage, right? So the highest probable will be, or the best scenario would be in the form of strength switch, right? Which is in my course. So any variation of that would be the most high probable, but you don't need that necessarily. It could be any, two-stage variant, as long as you get that V shape away. This is when I really require, like, ideally all assets to V shape is when you don't have a strength switch. That's ideally what you want to see at reversal. And when you don't need a strength switch is if we form an SMT, and like I said, all assets reverse, because that's the whole point of two stages of TN and like strength switching. It's for added confluence at the reversal, so that all assets are expanding away. But if an asset does this, and this is really what you want to see, guys, the asset manipulating actually manipulates this high, like it actually wicks it and expands away. Because if the strongest asset is actually showing that reversal signature, then that's all you need. Like that's everything you could ask for, right? That's what we want to see. Um, these are the highest probable reversals, guys. Is when the asset actually manipulates a higher low is like actually manipulating it, right? It's not just expanding through it while holding an SMT. It's actually wicking it. You know what I'm saying? Like those are the best SMTs. And that's when you, like I said, in my course, you could trade it from failure swing SMT, all that. Why didn't you trade the reversal on the second last example when London made the reversal? I missed it. Was it because no two-stage SMT? Uh, this example? What do you mean I didn't trade it? You could trade it. So this forms the a C2 low of day. You could trade C3. Right? This is your invalidation level. This is why I marked out EQ the whole range. This would be now your invalidation level. It's no longer, EQ and then the refined key level. As soon as you create the C2, it's a C2 candles invalidation level. He shows the indicator. Yeah, so this indicator you guys won't be able to get because a T-Trade shared me this, but it's like you gotta like pay for it or something. Like people can't find this exact one. So I'm pretty sure someone can link you probably the one that they use. It's really simple. It's like the same thing. I will cover this. I will get to all questions like after the stream. I have quite a bit of questions to get to, but I will get to them all. We're just trying to stay on topic here. Sometimes price creates high, very low day at like 10 and consolidates till 12. Uh, and then give us yeah, that's during a lagging asset typically. So this is when, and I like to do that on reversal days. Like, so for example, like if we form, it's gonna be kind of hard to draw or something. Maybe there's like a SMT here, and then maybe this is the like leading asset. You want to see like this asset actually expand away, for example. Maybe it's like expanding away, right? This asset's kind of bullshitting until 10 o'clock. It's likely it's waiting for 12 o'clock. Maybe it's going to create a two-stage PSP on the 12, two-stage PSP on the 6 hour, for example. Here's like 12 o'clock or whatever. And like I said, it's going to be a lagging asset always. Never, not really a leading asset. You don't really want a leading asset to reverse at 12 or something like that. It's always a lagging asset where the leading asset already reversed. Do you really ever still use double sweep SMTs? Uh, it's got to be in the form of this, right? And typically, this is going to be in the form of like, for example, when you have key level SMT, right? Key level SMT, PSP, where we sweep out that candle's low, right? This is like your second. This is like your double sweep here. That's the double sweep you want to use. Does that make sense? Should ideally what you want. Which entry is best to enter immediately on CSD or demand a gap? So obviously, the demand a gap is ideally like the best thing, but you sometimes gaps get left open. There's always a give and take, right? Like, if you enter the first CSD, like you're never gonna miss the trade usually, unless price creates a really large CSD on the creation of it. So for example, this is the CSD, and when we create the CSD, like price closes up here, right? Like you're probably not going to get the retest, and if you mark execute, the stop loss is too big. So this is when like you just demand a gap pretty much. You demand price to create a gap, and you just enter off that because that gives you a smaller stop loss and whatnot. But you don't need it. But obviously, a gap is going to be better. But if you want to trade the CSD, you want it to be a V shape, ideally. I want you guys to focus on like the highest probable things, which you're not gonna. If you're gonna trade the highest probable things, you're not gonna trade every day, right? It's just not gonna happen. That's not how the market works. It doesn't give us clean opportunities every day. If it did, if it gives textbook stuff, we might be gazillionaires. Yeah, you don't need a trade every day to make a lot of money. Gee, the asset sync part 2 and 3 content. It's already in the course. So Ashley Part 2 is covering SMT break for reversals, uh, which is in the course, and it's advanced pre discount and decoupling. The only thing I haven't covered yet, which I will, is going to be um, quarterly theory. That's it. Which is like the last thing you need to understand. Like that's the very last thing. When you have a very large gap, can you trust the SMT fill? Yeah, you can. So if you have like a very large gap, I mentioned this earlier. You probably have a very large range or something like right. So what you can do is you can always if you have like multiple gaps or something, jump up one time frame. You're probably just gonna see one large gap or just one gap, right? I don't know if that's your question or if it's just one huge ass gap. And that's a good question. I don't really like that necessarily. Um, hmm, depends, bro. It really depends. But I'm not the biggest fan of those, honestly. Expect a deep. Okay, if it's a deeper tracement, you're definitely gonna get what I just mentioned, probably. Yeah, I'm not the biggest fan of that. When you have like a freaking massive gap in SMT field, I feel like they don't work most of the time because their tracement is usually just not large enough. If a trader said, I take X number of trades per day week, how many or how few would tell you that something is wrong with analysis? Also, same question about average length of time. I'm not sure. Probably within the same sessions, a few hours. Um, how many if you would take something is wrong? I'm not really sure. I take X number of trades per day. Like, are you saying like as far as like win rate or like analysis goes? So a lot of the trades you take, or even like me, dude, like I don't get every like um analysis right or like whatever. Like that's not the main goal of trading. You're not gonna guess where price is going every single day. It's about you engaging with price. Like that's what's important. Like you can get the bias wrong all like I get bias wrong like all the time, dude. But did I take a trade in that direction? That's the important part. Like that's when you actually lose money. Like did you actually lose money? Because a lot of times you can get the bias wrong, but not even take a trade, and it's like who gives a like who cares? You know what I'm saying? Um, so those are like two different things. Just because you get the bias wrong and you're wrong or something does not matter. Because price can do stuff like all the time that makes no sense, dude. Like at least with the way we trade, like it makes no sense, and that's okay, bro. Like you just don't engage with price. I don't know if that answered your question or not. Maybe I don't understand it. But just because you get it wrong doesn't mean you did something wrong in your analysis. GT. Yeah, I don't know why I have that on here, honestly. I really don't understand. I just think it's sick. What concepts from QT? Well, we already covered. I don't use a lot of concepts from it. I just use a PSP, and then quarterly opens. That's what I use a lot to time trades, and it's typically for a lagging asset. So for asset synchronization, basically. When there's a trade sequence, and the third asset is holding SMT, but in close proximity, do I need a strength switch straight away? No, right? Because you would have the SM. So remember, you can trade an SMT, or this is the idea you want to see for an asset that manipulates, is when it creates SMT and then actually manipulates the high, so it actually wicks it. This is the strongest asset, right? And it's showing you that it's reversing from the SMT, right? So if it's doing that, so this would be the middle asset, for example. If the middle asset is actually reversing, that's the trigger for all assets reverse. If the middle asset is not going to, you know, rip through the high, then that means the lagging asset or like the not the lagging asset, it's technically the leading asset is not going to break the SMT either, right? But if the middle asset just rips right through it, then this SMT is probably not going to hold, right? But the SMT break is typically going to look like this. That's where it wicks the high. This is for any S&P, by the way. Maybe you're looking at price through two assets. Maybe there's close proximity to S&P here, right? But if the asset that manipulates, right, actually wicks the high and reverses, then obviously this asset here that is even weaker than this asset is obviously going to not take the high either. Does that make sense? Wait, wait, where are we at? Where am I? Oh no, I'm too far up or something. Something about yogurt. Where are we at? Some guy spilled yogurt. Spilled yogurt on his mouse pad. That's tragic. Do you need asset sync to trade? Or yeah, like do you actively look for them? Oh yeah, I actively look for them for sure. It is like a flow, so you don't need it necessarily, but I mean, I know a lot of my students that only like require that, bro. Like they only require a strength switch, and they do very well. You're gonna get like multiple trades a week, bro. Like just requiring that. Like you could literally simplify your process, dude. You could probably code this shit, man. Um, literally SMT with a swing higher low, strength is PSP. That could be your whole system, like no bullshit. That could be your whole system. Like you don't have to do everything I do, or you could just trade the universe sequence. You know, many ways. This example of resync. She said, yeah, this is actually what is this? Wait, at the same time, this example of us because at the same time we had. Okay, so you're asking like, how do you decipher whether we're going to reverse here because we have a strength shift PSP, or we're going to break the SMT? That's basically what you're asking. So it's pretty simple. If we are going to um, continue to these lows, what do we have to create? Right? We have to create SMT fill. If this is going to be an SMT break, we have to create an SMT fill. If you don't create the SMT fill and you just continue, expand away, um, then it's probably going to hold, right? Like I said, when you don't create an SMT fill, that is the first sign of a failed continuation. But in this case, that would be a good, if you want to, if this SMT to hold, you want there to be no SMT fill. That's a good thing to see. When I backtest, only finding like 7 to 9 opportunities a week on indices, is that what you also, dude, that's good. That's a lot. That's insane. It's like really good. That means you find multiple opportunities a day. Well, not every single day, but you know, that's a lot of trades, dude. And just how many trades you take per day is too many and too few. Oh, like how many is too many and too few? I don't think there is like a number for that, honestly. Like if it's valid, if there's like 4 valid trades, then I'm gonna take it. Although that's like, very rare. Um, and there's obviously never too few, right? If there's no trade, then I'm not gonna be like, oh, I gotta get a trade in, you know. If there's no trade, there's no trade. Are the kill zones for the course or for indices? That's actually a good question, honestly. What does it say here? What do I have? Sessions. I think this is mainly for indices. So this is for anything. It's for anything for New York. Let's go for New York. New York, New York, New York, New York, New York. Where is it at? Oh, okay. Let's see, this is New York. Yeah, so yeah, this is good. So eight to 9:30 or whatever. We're basically at 8 for a New York session within the 6 a.m. candle. Yeah, this is mainly if you're a oil gold trader. Ideally, you want to trade at 8 o'clock. That's when you start. Now, if you have red folder news, that's when you can trade uh, indices. Only if you had red folder news at 8:30, I would trade indices then. I would avoid it though, honestly, until 9:30 if you don't have red folder news for indices. But yeah, for gold, oil, you can start at 8 o'clock. You guys probably gonna wrap it up here pretty soon. Um, no, you can't get a. I mean, ZR1 is really hard to get. The markup is actually insane too. Holy crap! You seen the markup on those fucking things? Or at least the ZR1X. But any dealership I went to, they did not have a freaking ZR1. Oh yeah, you guys want to hear my story? I guess how I came about. Story time. Okay, let's see. So so first, I got introduced to trading when I was in the army. Um, so this was about, I want to say 19 years old, right? So first off, I about a year into the army, I knew that I did not want to do this. I did not want to be in the army forever, um, because the army can only give you a stable life. It can't make you rich, you know. That's all. I've always like wanted that. Everyone wants to be rich, right? It's like, how do you be rich, you know? I didn't really have any plans before trading. I was like, dude, I just don't want to do this. I don't want to do this, right? And then randomly, some dude hit me up on Instagram, um, about, we're having this webinar, learn about trading, like pyramid scheme type of stuff. You guys know I Am Academy? I forgot what it's called. It's like something like that. I'm sure you guys have heard of that shit. Who's heard of that? IML, yeah, something like that. Yeah, IML. Yes, it was literally that, bro. It was legit that. And he DM'd me. I was like, yeah, sure, like whatever, I'll join it. Um, Basically, like I did that for like 6 months or something. It's a pyramid scheme. Yeah, it's literally a pyramid scheme. You get money when people sign up under your referral, and the people that signed you up under your referral also gets credit for when you sign people up. So it's literally a pyramid scheme, right? It's literally a pyramid scheme. The more people you get, the more you rank up. It's like this website. They have like a website or whatever, and they hire like educators. So there's like educators teaching you, but it's all like indicator stuff. It's all like what's the word? What kind of strategy? Like retail basically. Like support and resistance, all that indicators. But anyways, like obviously it didn't work, right? Like without no one was making money. And I remember this is how I got hooked to trading, guys. I just threw 500 bucks into an unregulated broker, and I traded gold on the 1 minute. Again, no idea what I'm doing. Like literally no idea. And I flipped it though. I got lucky. I flipped it over leveraging because the leverage was like 1 to 500, right? And I got super lucky. I flipped it to like $1,500 or something, and that shit got me hooked. Like that was like I was like, oh my god, like I just made money. I just made $1,000 in a day. So I was like, dude, I have to like figure this out. But I knew it was a scam because I told my mentor at the time, and he was like freaking out, dude. He was like, how do you do that? Like, teach me your strategy. I was like, what? I was like, don't you do this, bro? So that I was like, what the hell, dude? That was weird. But obviously, I ended up blowing it. I ended up blowing it. On only claim. I ended up blowing that shit. But I was still hooked, man. I still wanted to learn, right? But I ultimately ended up leaving that stuff. And then I got into, I was just searching YouTube and stuff. And I got into supply and demand, basically. Supply and demand and like smart money concepts. Who knows like phantom trading and like mint FX? Yeah, dude. That's what I started trading for a long time. For like 2 years, man. Just trying to figure it out, bro. Like, because at the time it was like the most logical thing. Like, obviously, I didn't think retail worked. It's too like subjective and whatever. Um, which mentor in Phantom? Like Albie, you remember Albie? Like Albie and I don't know who else, bro. But there's a lot of them. Sketchy, yes, dude. Sketchy, dude. That's funny as hell. Yeah. Yeah, but yeah, they were trading like on the lower time frame, like the seconds charts, dude, like crazy. But obviously, like I was trading uh CFD basically, right? On Forex. So it's like it's horrible, dude. Like trading the 1 minute on CFD, dude, to risk 1%, you have to go in like 50 lots, bro, on a 50K account. It's going like 50 lots. So that the commissions are insane. The slippage is insane. It's just extremely hard to be profitable, like doing that. Obviously, it didn't work, dude. Like I wasted so much money, bro, on FTMO accounts. Dude, you know how much FTMO account is? It's not, dude. It's like so expensive. It's like 300 to 500 bucks to get a 50K to 100K account, dude. Now it's just blowing those guys, and you don't make a lot of money in the army, bro. You do not make a lot of money in the army. Uh, I think you make like, I think I made like as a specialist probably like 2K a month. I don't remember, like something like that, bro. So it's not a lot, bro. Yeah, I'm still recording. So it's not a lot of money, bro. So like, dude, a lot of times I was just like back testing, like all my free time, dude. When I got out of the army, I wanted to do this shit. Like I had to make that shit work. You know what I'm saying? So I was just doing that the whole time. Like basically, my entire army career, probably like 3 out of 4 years, right? Because I joined at 18. I discovered trading probably at 19 or so. And yeah, all my free time, dude, a lot of my money went to trading accounts, trading mentorships. Um, so I was paying for Phantom for, I don't know, man. I don't honestly know. I don't remember, dude. Maybe a year, like two. I don't know. I don't really know, right? But I was paying money to learn for sure. But ultimately, like it just didn't work out. And then I found this guy on Instagram. His name was like Cash FX, and he was using um, yeah, this shit's crazy. He was using those phantom like strategies, right? Flip zones, supply chains, all that stuff. Um, so I really liked him because he was showing like that he was popular, whatever, right? On Instagram, and he had a server, and I joined it, and it was 350 bucks a month, and for lifetime it was like I don't know, probably a couple thousand or some shit. But he had a pretty big server, man. He had a pretty big server. Um, but honestly, like no one in there was profit. It was weird. It was like no one in there was like getting payouts, but he was getting like all these payouts. But it turned out to be 100% fake. It was insane, dude. Um, this guy had 100% mechanical strategy, like 100%, like down to the bias, down to the entry. So it's like when your strategy sucks at 100% mechanical, like everyone's taking the same trades, right? And we're all getting shit on, right? Every single one of us are getting shit on. And he basically this, by the way, I've been in a server for like probably a year now. I'm kind of skipping forward a lot, but this is how it goes. Yeah, dude, this is the yeah. I told Yubi this, bro. This guy even sold. So basically, he made a Discord server, and he basically had like a few months of data, like every single day. He marked out a strategy, the whole mechanical strategy, like win loss. He would show like the win losses and everything. It was like a journal, right? And he sold that shit for like $100 a month, and I bought it, dude. I'm telling you, I was buying everything. When you're desperate, dude, you buy everything. Like I'm sure y'all are the same freaking way. You fucking buy everything, dude. Um, I did that shit. What the fuck was I thinking? I don't know. But anyways, fast forward, dude. He kept changing his strategy, dude. That was a red flag too. But at the time, I thought it was just refinements, right? But he kept changing his strategy, and I was like, okay, whatever. But anyways, dude, he ended up ghosting the entire server. He deleted all his social media, and like people are trying to sue him and things. Yeah, it turns out he was completely faking it all. Like he like photoshopped every past account and everything. It was crazy, dude. Um, but yeah, I got scammed basically. Um, I tell you guys, I was deep. I don't know, probably like 30K or something. Who knows, dude? But that was like 3 years maybe. Ended up getting out of the army. Not maybe not 3 years, but whatever, somewhere around there. Ended up getting the army. Um, and then I found ICT concepts through T trades, bro. And I literally thought, I thought ICT concepts were like trash, like because that's what everyone talks about in the supply demand or like smart money concepts. They all shit on ICT, right? So I was like, this shit seems too complicated. It's too, I don't know, it's ass. Like I just had a preconceived notion as ass because everyone around me all the traders I knew said it sucked. So I never gave it a shot, especially ICT channel because it was just too long of videos, and I was used to being baby fed like ABC 1 2 3 strategies. So I thought that was way too complicated, right? But anyways, yeah, I watched some T trades videos and like they made sense a little bit, you know, like they made sense. Like there's actually daily bias and stuff like that. You know his daily bias video? That shit was like enigma to me, dude, at the time. Because no one else like this is why I struggled so much, man. Um, is because no one really defined a buy it. Like no one could tell me why price is moving. You know what I'm saying? No one could do that. And even MintFX couldn't save me. And I think he's a great mentor, by the way. I think he really is. He's also like supply and demand or something. Even though he also switched to like EMAs and shit. But I actually like that guy. So we have to add on to the money I wasted to him as well. Yeah, he started off with Wyckoff too. He changed a bunch, but he was like the best probably outside of P Trade's mentor I've had. But I don't use anything of him. But I actually passed some accounts with him, with that guy. I did get some payouts, but they were nothing crazy. I was still hella deep in the hole, still maybe getting a payout and then blowing it. You know what I'm saying? So that was like 3 years in or something. I can't. It's like blurry. I don't really know. But I was still hella deep in the hole, dog. Like, but fast forward to T Trades, right? Um, and then I joined his server, T Trades server. That's where I literally met Kiko, bro. So long ago. He was a helper. Kiko was a helper. Who else was in there, man? Yurdon. I don't know if you guys know Yurdon. I think he's in the server. But yeah, hella OGs in there, man. I met all these people, and through just time, I just studied daily profiling and all this stuff, um, and I slowly got better, right? And I put together some strategies, and it was good enough to like actually make some money, right? And then T Trades offered me a spot because I was teaching. I was just so guys. I'm like so passionate about trading. I was literally back testing stuff every single day, like every single day, no bullshit, for like I don't know a very long time, like a very long time. I had to figure this out. Also, yeah, MXM Trader, he was a big part of my journey, like just putting together a framework, right? Like IRL, ERL, because that stuff is enough. It truly is. Like it can be enough. Um, like basically like when I first started getting payouts, guys, it was very simple stuff, like very simple stuff, and that was enough. Like I said, um, but yeah, I was starting to make some money, um, and then where were we at, man? I think T Trades. Yeah, I was teaching a T Trade server for free. Yeah, I remember. Right. I was teaching a T Trade server for free. It's just something I enjoyed doing. I was making YouTube videos. I just like teaching. I like talking about trading. And then yeah, T Trades offered me a spot, and that's where I learned his model, like swing formations. I was already using swing formations, but not on a fractal level. Um, and then like through time, like I just thought about like in his course he talks about how you want a small wick to trade expansion. I was like, oh my god, that's actually so smart. Like that's actually a really good filter. So I was like, what if I require that small wick on all time frames? Right? On all time frames. I was like, how do I do that mechanically though? Right? Because you could technically do that mechanically if you just look at the daily small wick, go to the 4 hour small wick, daily small wick, you could do that technically. But I was like, what if I just like have a swing formation form the high and low of a higher temper candle? And that's where like 4 hour profiling came in. And then profiling a 4 hour candle came in with just using swing formations but smaller time frames, right? Um, and that's where like aligning expansion candles came in for me and profiling a candle with like swing formations instead of using a CSD. For some reason, I can never get behind higher tempered CSDs. I don't know why. I think I'm like too impatient or like to me it's like I already missed the move if like an hourly CSD happened. I don't know. To me that just didn't resonate for me. So like I have to like confirm a high and low day with like a I just had to do it with like a swing formation or something. And that's what I basically came up with, right? And then I showed it to T Trades, and he was like, "Holy shit, this is like goaded! Like, I actually love this." He was like, "Do you want to create a course?" I was like, "Sure." And yeah, dude, people just loved it. Um, and yeah, like fast forward, I guess here I am. I don't know. I don't know what else to say. But yeah, for many years, guys, I was very, I struggled just like you guys, and I put in a ton of work. And I just kept refining, right? Um, then I wanted to learn more about SMT. SMT. I noticed every freaking reversal had SMT. Um, like every single freaking reversal had SMT. So I was like, dude, I want to learn more about SMT. So that's when I looked at quarterly theory a little bit, right? Looked at quarterly theory a little bit. And I was like, okay, some of this stuff is like kind of complicated. I don't want to use true opens. I don't want to have those indicators that have all the quarters and like stacked up. I don't really like that. And then I learned about PSPs. I was like, okay, this is freaking goaded. Like PSPs are insane. Like I was like, oh my god, this is insane. So I can easily implement PSP into my system because I already used to informations. So I was like, I'm gonna do that, right? And then yeah, like SMT, like obviously we're gonna filter our SMTs with um, PSPs, right? And then what else, man? Strength switch is something I developed my own just through chart time because I was like, not every SMT could hold. Like obviously not every single SMT could hold. So it's like when do they break and when do they actually hold, right? And that's something I developed um, just through a bunch of chart time. So first I learned about asset synchronization through someone. His name is Jacob, right? But he doesn't really teach it like how to trade it. It's just like SMTs break. Like that's all there was, right? But I wanted to know like how and when do they break. So that's when I just discovered strength switching, and it made a lot of sense to me, right? Yeah, just through time, man. Was like a lot of backtesting and chart time. You just get better over time. It's a slow process, bro. It's a very very slow process. Um, but yeah, that's really it, boys. What else is there to talk about here? Yeah, I've been scammed. I've been through it all. Everything you can think of, man. Pretty much it. But yeah, that's basically the end of the stream. Um, I have some questions to get to. Cheeks to open my eyes. Yeah, I tried to, like I said, I was really searching for something that could be repeatable and mechanical and you just can't find that, bro. Like I just couldn't find it anywhere. Like um, that's why I try to create. I mean, it doesn't, bro. It kind of doesn't. I feel like my system is like one of the most mechanical processes you can have, honestly. Like a lot of people like will shit on it, it's because it's too complicated or whatever. And I get it. Um, when you add all the strength switching and asynchronization, that can be complicated, right? I get it. But that's not the GXT model necessarily. The GXT model itself is just the mechanical process, right? Aligning expansion candles. That's GXT right there, right? Um, for our profiling, all that is GXT. As far as like asset synchronization goes, that's just an approach to the market. Like I apply the GXT model to that. Two different things, which people just don't understand, but it's all good. Do not worry about obfuscation. No, I don't, because all my students are using prop firms basically, and that's not real money. So, and I just don't think there's enough people to do that, bro. Yeah, I'm telling you, like Kiko he's always making jokes and stuff. Yeah, it's okay. It's not for everyone. So you're not. Life is funny. I just found Garrett due to people talking poo poo of him inside Jacob's group. Yeah. I'm telling you, bro, like people are talk shit. Don't know why. Is what it is. It is what it is. At the end of the day, they do not pay my bills. Um, yeah, it's pretty cringy. Especially when like never mind, I'm not even gonna go there, bro. It is what it is. I don't really care. I don't really buy into it. I'm not gonna buy into it anymore. It is what it is. It is what it is, man. We're gonna do us over here, and that's it. Didn't Jacob say on X? Yeah, dude. If you actually watch that video, this is what I'm talking about. Like, I got the term asset synchronization from him. I literally, I've already gave him credit. Like, it's a crazy thing. I give everyone credit I've learned from. Right. I got the term and the idea of asset synchronization from him. But does he teach how to actually trade it? No, no. I like popularized it because I actually show you how to do it, like how to trade it. All he talks about is like SMT breaks. It's like, okay, the fuck am I gonna do that information? You know, like this is a big difference, but whatever. But yeah, social media is something else. I'll tell you that. That's you guys see. I'm not being active on social media that much. I just post my trades and I fuck off. Is there any difference between GXT and LTM? You tell me. Is Eric my best student? I don't know about my best, but he's one of them. What is FTM? Failure to manipulate. Anyways, guys, let's end this. Um, Good stream, W stream. Did that answer your question, guys? My lecture here on what do you do when you hop on the charts? It's all about invalidations. Cool. Glad to see you guys. Did you guys like this as well? Did you guys watch this? These videos here? I can do a lot of these. Uh, I'm wondering if I should put these in WAP as like maybe examples. Let me know what y'all think. We could definitely do it. Okay, I'll let Simple know. Who is the next mentor here? We'll see. Good. Okay, y'all want that on WAP? Okay. Love the backstory. Yeah, I'm really one of you guys. Like seriously. The only difference is I started before you, and I put in a ton of work. Like I'm not gonna lie, I put in more work than all of y'all. Like it's just a fact, you know. It's not a diss, but I promise you I did. I wanted it bad, dude. It was like probably 3.5 years or something like that. I couldn't tell exactly. It's like kind of hard to say. Such a long journey, but it's like the amount of like work I did like every single day. Like I was like obsessed. Like you have to be like obsessed with this shit, dude. Like dead ass. Ain't been in 4 years. Yeah, there's no time limit on it. Like some people learn in a year. Like UV, dude, UV learned in a freaking year. He's so lucky, bro. He literally started off by learning ICT and then he joined the lens. Like that dude's lucky as fuck, right? Like actually lucky as hell. Yeah, he joined the lens first 4 months, dude. Fuck you. It's actually crazy. Oh wow, 6 to 7 months into trading and you launched this? That's insane. Wow. What about Splash? Splash is young, so I'm gonna assume like pretty. He's not been doing it very long. I assume like maybe 2 years. I don't know actually, but he was also in the lens too. Eric was in lens. Uh, yeah. Gare Unk, pretty much. Pretty much. Compared to a lot of you guys, yeah. Ferocious. So Ferocious learned from me, but not through lens. I don't know if you guys know who Eurodon is. Like it's like an OG friend of mine. He's friends with him, and yeah, he basically learned from my stuff. Sorry, tagging was crazy. But yeah, Ferocious learned from me. Most. Never mind. Anyways, guys, probably wrap it up. Hope you guys enjoying. Yeah, let's get. I'm gonna get to these questions here.